I promised to meet you in Tirunelveli on the 10th of March. So the place has been finalized. So I meet you on the 10th of March, the Sunday, at the Maharasi Mahal, KTC Nagar, Tirunelveli, between 4:30 and 7 p.m. See you in Tirunelveli on 10th.
Hi everyone, welcome back to Be Rich. Today I want to talk about Tata and Sons. It's been making the news lately that Tata and Sons IPO is going to be coming. And the reason why there's so much excitement about it is because Tata group companies have a holding in Tata and Sons. Like Tata Motors has 3.06%, which has been valued at 24,000 crores. Tata Steel has a holding in Tata Sons of 3%, which is valued at 24,000 crores. Tata Chemicals has a holding in Tata Sons of 2.5%, which is worth 20,000 crores. Tata Powers has a holding of Tata and Sons of 1.65%, which is worth 13,000 crores. And Indian Hotels has a holding in Tata Sons of 1.1%, which is worth around 8,800 crores. And Tata Consumer Products finally has 0.5% holding of Tata and Sons, which is worth around 3,500 crores. So if you notice, these companies of Tata group companies, which I just mentioned, they've been surging in prices. Especially Tata Chemicals has gone through the roof because there's speculation that Tata and Sons IPO is just around the corner, and these companies are holding Tata and Sons shares. So you get to own Tata and Sons through these companies is what the market feels. So why is there a sudden push for Tata Sons IPO? So there's a lot of interest because Tata and Sons historically have always been very clear they're never going to list Tata and Sons, and there will never be a Tata Sons IPO. But recently, RBI has come out with the rule. What is the RBI's rule? This is RBI's rule as it states. If a core investment company doesn't own more than 100 crores in assets and does not raise public funds, if it repays them or transfers them to a separate entity, then it neatly sidesteps RBI's grip to free itself from being considered as an CIC or upper layer NBFC. And it's not required for public listing. So if you noticed, what RBI said is it's a CIC or the NBFC ruling. And to move away from this, they need to lower their debt. So what Tata and Sons has decided to try and do, because this news broke out a couple of days ago, that Tata Sons IPO, they'll be forced into doing the IPO. So what Tata and Sons now is trying to do is they're trying to redig their debt within Tata and Sons to avoid doing the IPO next year. So what Tata and Sons' holding company is there's $150 billion in the Tata group, which needs to be listed by September 2025. And it's exploring options in restructuring the balance sheet so it can get an exemption to the RBI mandated for IPO. So if you look at the current shareholdings of Tata and Sons, Ratan Tata Trust has 24%, the other Tata Trusts have 14%, Palonji has 18%, and the others have 16%, and Dobraj Tata Trust has 28%. This is how it's currently standing. So Tata and Sons is being registered as a CIC with the RBI. What is the CIC? CIC stands for Core Investment Company. It's a type of non-banking financial company, NBFC in India. And it's defined as and regulated by the Reserve Bank of India. And the primary business of a CIC involves in acquiring shares and securities, which constitutes at least 90% of their total assets. So you can understand what Tata and Sons is. Tata and Sons is a holding company, which is what Core Investment Company is. And 90% of Tata and Sons assets are holding securities and shares of the Tata Group. So this is why they've registered themselves as a CIC. But unlike other NBFCs, CICs do not engage significantly in trading or other commercial activities, but focus on holding stake in group companies, thereby serving as an investment company for corporate groups. There are other CICs in India. Tata and Sons isn't the only one. But Tata and Sons has so much of limelight on it because of the sheer value of Tata and Sons as the size of the Tata and Sons. That is why it falls into the category of the upper layer CIC. As per recent guidelines from the RBI, CIC is classified as an upper layer of NBFCs. And based on this criteria and the size, and the interconnectedness, the complexities of the Tata and Sons, they may have to go for a public listing to enhance transparency and public scrutiny. Like I said before, when I was reading out what are their holdings in the current Tata Group, which are publicly traded, there's so much of other things inside Tata and Sons which we are not purview to because it's a privately held company and they're not legally bound to share that information with the public. So what is Tata and Sons trying to do is rejig their debt. There is a certain amount of debt inside Tata and Sons which they would have given these Tata Group shares as a collateral. So by repaying these loans which are there in Tata and Sons, by freeing up these shares and then transferring it to a different entity, they will lower their threshold and deregister themselves as a CIC from RBI, thus avoiding the IPO. So they have 1 year's time. What Chandrasekhar is going to try and do is understand which are the huge, large debts within Tata and Sons and which shares are being held by these debts. Then try and repay these debts and remove these shares and transfer them out of Tata and Sons by lowering the threshold for CIC upper. Then they'll have to deregister themselves from the RBI and then they will not have to do an IPO. This is a long, complicated process which will be undertaken by the Tata and Sons right now. If they successfully manage to do this before the September of 2025, there will be no requirement to do the IPO. If they fail to do this, then they will be obligated to do the IPO. So the anticipation of Tata and Sons potential IPO has led to a sudden surge in all Tata Group companies, including Tata Chemicals, which has seen a 15% surge in stock price, indicating that the market is strongly speculating that Tata and Sons will not be able to do this rejig of debt and transfer these shares and holdings out of Tata and Sons by lowering itself and removing CIC registration. Now, that leads to a lot of speculation. As an investor, yes, it will be nice to own a Tata and Sons share, no doubt. It will be like owning Berkshire Hathaway, Warren Buffett's, and it's even more prestigious than an Indian owning a slice of a 150-year-old company. But honest to God, I don't think this is going to happen. I do think Tata and Sons will never be registered, as an IPO, because it is their motive to keep that as a family-held trust, and most of their public work which they do runs through Tata and Sons, and to have that as an IPO and have publicly traded company will become very difficult for them to have the flexibility to do a lot of their work which they do for us in India. So I do speculate that by September next year, they would have removed all these shares which are in debt and they would have freed them and transferred them out of the Tata and Son entities and successfully re-register them from the CIC. And they will not be doing an IPO. But if you're in the camp and you do believe that Tata and Sons will be doing an IPO, then yes, you can speculate on this. This is why there's a sudden surge, not only of Tata Chemicals, but across the board of all Tata company and Tata Group shares. There's been a surge in Tata prices. If you look at the chart, and I'll ask my editors to put up the chart of Tata Chemicals, Indian Hotels, Tata Motors, Tata Steel, any of the Tata companies. If you see it for a 1 year on the screener, if you go to screener and check the 1 year, how the prices moved, you'll see a surge in all of them, including Tata Power. So that's a lot of speculation going on. Yes, is the speculation warranted? I don't know. I usually don't like speculation and I always err on the side of caution. So I would not speculate. Yes, it's a sound investment if you buy a good company at the right price, like Anand always says. There's no point buying a diamond needle, as Anand says, because you always look for growth. Any investment you make should have a potential for growth. And if you don't see the potential for growth for the next 5 years, 10 years, then I would not invest. And the best way to see the gauge for the potential of growth is the PE. So look at the PE. Right now, any of the Titan, Trent, any of them you look at, it's all at a PE range, which doesn't make sense investing into those, the Tata company. So keep an eye out. When you do see an opportunity, people usually, when they speculate in the market, it leads to a price correction later on when speculation doesn't prove to be fruitful. And those price corrections may be opportunities for you to look at buying these companies. And I hope I kind of gave clarity on what is this Tata Sons news, what CIC is, and what NBFC upper is, and what the RBI rules are, and how Tata and Sons are going to try and avoid doing this IPO for Tata and Sons by lowering their debt. What is the debt within Tata and Sons also, I've tried to explain it to you. I hope you found this video informative and entertaining as always, and I'll see you in the next one soon. Bye.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.